Hello folks, and welcome back to the channel. Welcome back to another crypto news video. And today we have 4 relevant topics of today, April 8th, 2026, that we will be talking about, right? I think I'm just gonna hop straight into it. There's no nonsense today. We're gonna do no nonsense, no need for any special interest. I don't really have anything extra to say, if you know what I'm saying. So we're just gonna hop in straight into it. And yeah. Today is April 8th, 2026. Remember, I'm not a financial advisor. Do with this information as you will, and I'm simply here to report. So, today's crypto market is reacting sharply to major geopolitical shifts, which you should know about, and a landmark institutional entry into the space. Here are 4 of the most relevant topics as of April 8th, 2026. So, as you know, all the stuff going on between the US and Iran, as you should have heard on the news, if you've been paying attention, if you're in the finances, then I'm sure you should have heard of this, and you probably should have seen it immediately. I'm pretty sure this is top headline news. Big news, but the ceasefire that was made between the US and Iran has caused Bitcoin to surge towards $73,000, which is hot, as you should know. It was because of the entire conflict. Bitcoin was stagnant at about $69,000, and now it has surged above $4,000 up to $73,000 because of the US-Iran ceasefire. So the primary driver for today's market rally is a significant de-escalation in the Middle East Eastern tensions following reports of a diplomatic breakthrough between the US and Iran. And because of this, Bitcoin rebounded sharply to approximately $72,750. And this is a positive sentiment which triggered a massive short squeeze, with several altcoins like JOE and NOM seeing triple-digit gains as risk appetite returned to the market. Now, the second topic we're going to talk about today after that is Morgan Stanley launches his launch of MSBT, which is Spot Bitcoin ETF. So, in a historic move for traditional finance, Morgan Stanley has officially launched the Morgan Stanley Bitcoin Trust, MSBT. It is the first spot Bitcoin ETF issued directly by a major U.S. bank, with a highly competitive expense ratio of 0.14%, which is undercutting several existing rivals currently, and the bank is leveraging its network of 16,000 advisors to integrate Bitcoin into mainstream wealth management. So that is the second topic of today. For the third topic, we have Iran trying to accept Bitcoin for the Strait of Hormuz tolls. So in a bold move following the ceasefire, Iran has announced plans to charge ships Bitcoin for transit through the Strait of Hormuz. By tying cryptocurrency to one of the world's most critical energy choke points, this policy highlights a growing trend of commodity-backed crypto utility and provides a real-world use case for digital assets in international trade and sanctions evasion-proof commerce. This is the first time in history and has never happened before, and this is going to be talked about for generations to come, for crypto generations to come, because it's the first example. I mean, it's equivalent to the first time people are using the dollar instead of using pennies or coins. You know what I'm saying? Revolutionary. I mean, people used to, you hear the dollar, you think of it as like liquid gold, right? That's what dollar used to be. And now after 3 centuries or whatever, 2 centuries, now cryptocurrency, or Bitcoin mainly, is being talked about as that liquid gold, right? So that is the third topic we're going to talk about. And for the fourth and final topic, there will be a fifth topic at the end, but it's less relevant. Now, for the fourth topic, I'll tell you what the fifth topic will be. But for the fourth topic, there is a regulatory shift for the SEC. So the SEC is, quote, safe harbor, unquote, and stablecoin yields. That's the topics with the SEC. So the regulatory landscape is shifting quickly today as, so the safe harbor, the SEC has sent a new crypto safe harbor proposal to the White House for review, signaling a potentially more lenient path for startups to achieve decentralization without immediate enforcement. And this ties into yesterday's topic, if you watched the video or not, where we spoke about the new SEC crypto regulation bill that was passed. And then the other two part of that is the stablecoin yields, explaining that. So a White House economic analysis was released today arguing that banning stablecoin yields would hurt consumers more than it helps banks, providing a boost to DeFi, decentralized finance platforms that rely on yield-bearing dollar assets. So, and then a quick thing about assets. So for Bitcoin, BTC, the price is approximately $72,700, and it's gone up since the last 24 hours by 5.7%. Solana, SOL, which is currently around approximately $84.78, has gone up by 6.8%. And then XRP, which is $1.38 right now, went up approximately 5.6%. So everything is going, not everything, but a majority of big things are going up. The market is green, and things are looking very, very nice. Now, before I start getting into topic 1, the fifth topic will go into beyond the 4 topics that we're going to cover, is sleeping giant development today that rounds out the picture, and it's called the Schwab Factor. I'll get into that. It has to do with Morgan Stanley targeting wealthy clients, and Charles Schwab announcing today that it's moving beyond ETFs to launch direct Bitcoin Ethereum trading for its retail users. We'll get into that, but first let's get into the main topic, the biggest topic of the day, and that is the Bitcoin surging to $73 on the US-Iran ceasefire. So, the announcement of the 2-week ceasefire between the United States and Iran has acted as a massive relief valve for global financial markets. After nearly 40 days of hostilities that saw Bitcoin dip as low as $67 due to geopolitical uncertainty, the shift towards diplomacy has reignited investor appetite for risk. So here is essentially a deeper look at the mechanics behind this rally. So the terms of the deal of this, just a little context, the ceasefire was brokered by Pakistan and announced just hours before a critical 8 p.m. Eastern Standard Time deadline set by the White House. So, the Hormuz condition, which is a primary trigger of the market recovery, was the agreement for a complete and safe opening of the Strait of Hormuz. And now, obviously, this is coming from a joint, if you've been following the news, a bunch of countries have been coming together to team up to figure out, like a joint committee to figure out how to get the Strait of Hormuz opening. A lot of people were signing in and then signing, well, not people, but a lot of country representatives and diplomats were signing to this treaty, right? This unified treaty. I don't remember the word they used for it. I don't remember what the word is, but it's a unified treaty to get one thing done, like a mutual goal, whether they're friends or enemies, right? So this is happening, and so now they've come to this. And then there's a 10-point proposal that Iran provided a peace framework that President Trump described as a workable bias for negotiation, signaling the strongest move toward a lasting truce. Yo, that was a crazy voice crack. Where was I? Lasting truce. Right, lasting truce since the conflict began in late February. So, why Bitcoin responded so violently? Well, Bitcoin jumped to $72,000 to $72,700, which is a 3-week high, highlights its evolving role as a global macro asset. So, it's essentially, it's gotten an exit from digital gold. So when the war escalated, many investors rotated out of Bitcoin into physical gold. And the ceasefire prompted a reversal of this trade, as traders moved capital back into high growth assets. And then another thing, oil and inflation correlation, as Brent crude prices plummeted by 13% overnight on the news, and lower energy prices reduce global inflation fears, which historically creates a more favorable environment for Federal Reserve to consider interest rate cuts, which is a major, quote, bullish, unquote, catalyst for crypto. So that's essentially great. This is great news right now. That ceasefire is great. I mean, the market is more favorable. I mean, oil and prices. I mean, just stepping aside from crypto, those oil prices going down is going to be great for people just filling up their cars and getting around, if you know what I'm saying. So it's all great. So that's great. Being able to spend less on fuel means people have more money, and more money means people can invest more. And investing more, I mean, and assets are going up and everything, right? So this is a huge moment for crypto right now. It is very beneficial. And there's also short squeeze dynamics, which means so much of the move from $68,000 to $72,000 was fueled by the liquidation of short positions, which are traders who had bet on prices falling further due to war. So as prices rose on the news, these traders were forced to buy back Bitcoin, creating a self-reinforcing upward spiral. So it was essentially guaranteed. Because this thing went positive, all the negatives sort of had to go positive with it. They didn't have a choice. You can't have -1 if everything is positive 2, if you get what I'm saying. If you add 5, that -1 can't stay -1 at all, no matter what it wants. It cannot stay negative. It's going positive, and that's essentially what's happened. And so another wider market impact of this is that this positive sentiment isn't just limited to Bitcoin. It's limited. It's not limited at all. It's to all of crypto. So like the altcoin surge, like Ethereum, which outperformed Bitcoin on percentage basis, rose to 7.4%, approximately $2,273, while high beta assets like Solana XRP saw similar gains. And then institutional confirmation, as data from today shows that U.S. spot Bitcoin ETF saw nearly $471 million dollars in net inflows on Monday alone, suggesting that big money was buying the dip in anticipation of this diplomatic breakthrough. So basically, companies, billionaires, millionaires are capitalizing on this, as we all should be too. This is all great news, and people are it's all great, right? Now I'm just getting my keyboard connected because I want to go deeper into this. So I want to do some quick research, if you know what I'm saying on this topic, Lil, right? Let me turn on my headphones. Hold on, folks. Because we just did the basics, right? Just the basic information on what's been up and stuff like that. So I just want to cover a tiny bit more. We're gonna do a little tiny bit more research just to get on it. You just give me a second, folks. I will be there in a second. I shall be there. Yes, you shall see. So let's see. Well, let's see. What more? Well, not what more. Let's see. How or what do you say? We go for predictions. We want to go how. Well, let's start simple. What more is there to Bitcoin price surging and the market? Let's check out that. So a little information on that I just got from searching, right? Is that hold on, it's loading. It's taking a while. It's taking a good moment. But we've got nothing. But don't worry, folks. But we got nothing. So everything's pretty looking positive. Now remember, I'm not a financial advisor. You should not take my advice. So when I said we're all investing, we should be investing. No, I don't think I said it like that. But the point is, you shouldn't take my opinion on it, right? I'm not a financial advisor, so you shouldn't just follow what I'm saying recklessly. Well, while more information is loading, I'm just going to move on to topic 2, and we can come back to that later. So, expanding on topic 2, which is the launch of Morgan Stanley Bitcoin Trust. So, on April 8th, which is today, 26th, the launch trust, it represents a Rubicon, a quote, Rubicon, unquote, moment for Wall Street. So while dozens of Bitcoin ETFs have existed since 2024, MSBT is the first to be issued directly by a major U.S. commercial bank under its own brand rather than a specialized asset manager like BlackRock or Fidelity. And so why is this specific launch is shaping the market today? Here's why. So the fee war escalation. Morgan Stanley didn't just enter the market. They entered with a scorched earth pricing strategy. At 0.14%, MSBT is now the cheapest spot Bitcoin ETF in the United States. So the comparison is it undercuts the current market leader, which is BlackRock's IBT, which is at 0.25%, and even the previous low-cost leader, which is Grayscale's Bitcoin Mini Trust, 0.15%. So the savings for institutional investors managing $10 million choosing MSBT over IBT saves roughly $11,000 in annual fee, a difference that professional allocators cannot ignore. Because to someone might think, well, they're a millionaire. If they have $100 million, what's $11,000? No. Every dollar counts. Every dollar is a new investment. Every dollar saved is another investment that can be made. Those $11,000 are huge. And like even if you think it, if you stop thinking about it, like trying to think like they are, and just think about how you are. I mean, most of us. I mean, no. If you're in this industry, you're probably not, right? But most like regular folk, like middle class people, or that $11,000 already that's a lot of money. I'm talking. That's like what a third of the year's salary, maybe a tenth of your salary, whatever it is. It's a lot to make in a moment, right? In annual fees, right? So that difference just can't be ignored. And then also the power of 60,000 advisors. So the real impact isn't just the price, it's the distribution. So Morgan Stanley Wealth Management oversees approximately $6.2 trillion in client assets. And so there's this seamless integration. By offering a house-branded product, the firm's 60,000 financial advisors can now incorporate Bitcoin into client portfolios with recommended allocations up to 4%, using the same internal tools they use for stocks and bonds. And so this removes friction. So this removes the compliance hurdle, quote, compliance hurdle, unquote, where advisors previously had to justify using third-party crypto products. Now it is a standard part of the Morgan Stanley ecosystem. Now, number 3, institutional legitimacy and infrastructure. So the launch signals that Morgan Stanley is no longer just a distributor of crypto, but an active participant in the infrastructure. So there's dual custody. To ensure institutional grade security, MSBT uses a unique custody split between Coinbase custody and BNY Mellon. Very trusted and currently very secure encrypted sites. Like everyone knows Coinbase, most people know BNY Mellon. I think it's popular. I think we could say just about every trader knows about BNY Mellon if you're into trading and whatnot, and you know that those are secure. So by using this dual custody, it's creating that institutional grade security, right? And then the digital trust roadmap accompanying the ETF launch is the bank's pursuit of a national trust bank charter for its new entity, Morgan Stanley Digital Trust. This suggests that MSBT is just the first step toward a broader, not just but multiple, like broader services like fiduciary staking and tokenized asset management. Now, number 4. Future product pipeline. So Wall Street sources indicate that the success of today's MSBT launch is the green light for a full suite of bank-issued crypto products. The forum has already hinted at filing for Spot Ethereum and Spot Solana's ETFs later this year, and alongside plans to integrate direct crypto trading into its E-Trade platform. And the bottom line is that today's launch transitions Bitcoin from a speculative alternative to a portfolio component within the world's most conservative wealth management circles. So essentially, what MSBT is doing, they're capitalizing on this Bitcoin surge, right? And they're bringing in a new opportunity for all traders investments that's actually looking pretty hot. It's actually looking pretty good. Its percentage, what was it? What are my notes saying? Its percentage compared to other competitors for its what do you call it? For its pricing strategy is just enormous. Cause the current market leader, like even though there used to be a 0.15% for grayscales, the current leader is 0.25%, which means that 0.15% is right now. So it's not only making it's not only at a record low, it's undercutting basically everyone. It's beating the current leader. So if it's beating the leader, it's beating every other platform, and it's putting them at a disadvantage. And traders are not going to lose it. As I was saying in the previous video, the silent migration of traders, they're going to go towards whichever platforms are the best. Even marginal stuff is going to move them. Why would I stay on this platform if it takes 30 seconds to launch when another platform only takes 15, as an example? I'm going to go towards the one playing 15. Now, people might say, well, 15 and 30 seconds, that's only 15 seconds different. What does it matter? It matters a lot when it comes to investing. Those 15 seconds could be the difference between seeing when a crypto surges by 18%, and not seeing that and missing it completely, or people who are on the better platform are getting to it first. You know what I'm saying? Because when a lot of people sell, that price is gonna go down, right? It's gonna go down, or I believe that's how it is. Don't take my word for it. I believe that's how it is. It's gonna go down, and those 15 seconds could have cost you your chance to sell, if you know what I'm saying. So, anyways, we're gonna go to number 3, right? Ending off on that. So the announcement that Iran is mandating Bitcoin and cryptocurrency payments for transit through the Strait of Hormuz is being called the first sovereign-scale application of digital assets in the global trade. So, as of today, April 8, 2026, here's how crypto toll system is functioning and why it has sent shockwaves through both the energy and crypto market. So, starting with number 1, $1 per barrel. The Iranian Revolutionary Guard Corps, IRGC, has formalized a structure where oil tankers must pay a transit fee based on their cargo volume. So, the cost. Tolls are set at approximately $1 per barrel of crude oil for a very large crude carrier, VLCC, carrying 2 million barrels. The fee is roughly around $22 million, right? And the process, ship owners are required to email a full cargo manifest to Iranian authorities before entering the strait. Once approved, they receive a payment request and a safe passage window, quote, safe passage, unquote, window to complete the transaction. And so the currency, while Bitcoin is the primary headline, Iran is also accepting stablecoins and Chinese yuan. And stablecoins are particularly popular for these transactions because they avoid the 2.2 to 3% price volatility that can occur during the minutes it takes to confirm a Bitcoin transaction. Right? So the Bitcoin transaction, as I said, is roughly about, so it's the fee is roughly about $2 million. That 2 to 3% is huge. What is 1% of 1 million? That's $10,000. That $10,000 is huge. And as for 3% of 2 million, that's what? $60,000. That's a lot of dollars. That's a lot of money. Like I said, that's like some people I believe are making like $30,000. That's double your paycheck. That's two annual paychecks. If you know what I'm saying. That 60,000 is not light. And everyone knows it. The oil tankers know it. The companies know it, etc., etc. So anyways, a tool number 2, it's a tool for sanction evasion. The shift to crypto is a calculated move to bypass the US dollar clearing system, SWIFT. Right? Because crypto and blockchain, it's currently not controlled by the U.S. government. So it's decentralized. They can't really tax it or put tariffs on it, unless it's within the U.S. So it's sort of a not even sort of. It really is a calculated move to bypass the U.S. system. So by using unseizable assets. So by demanding digital assets, Iran ensures that transit fees cannot be frozen or confiscated by Western banks. And then the speed of finality. Oh my. Transactions are reportedly settled in seconds, allowing tankers to clear the strait without the multi-day delays typically associated with international bank wires. And then number 3, which is geopolitical, quote, joint venture, unquote. So, in a surprising twist today, President Trump floated the idea of turning this toll system into a joint business venture. Or, quote, joint business venture, unquote. So he suggested that if the U.S. and Iran could coordinate on the safety and security of the strait, the tolls could be used as a peace dividend to fund the security operations of both nations. So Trump characterized the idea as a beautiful thing, signaling that the U.S. might actually tolerate the toll system if it ensures the consistent flow of oil and prevents further military conflict. And then number 4, impact of oil and crypto on impact on oil and crypto prices. So the formalization of this toll system has created a unique floor for crypto demand. So, organic buying pressure. So, to pay these tolls, shipping conglomerates now have a functional, not speculative need to hold large amounts of Bitcoin and stablecoin. This is creating hundreds of millions of dollars in consistent buying pressure. And then also, there's energy market relief. So, despite the cost of the toll, oil markets, WTI and Brent, actually fell over 10% today. And so, traders are relieved that a payment mechanism exists at all, as it suggests that the blockade period is over and oil will begin flowing through the strait again. And so the perspective is that this move marks a shift from crypto as a hedge against the system to crypto to crypto as the primary rail for the world's most critical energy corridor. It essentially turns the Strait of Hormuz into a massive real-world on-ramp for digital assets. And that essentially wraps it up for that topic. I mean, the whole deal, it's looking great for traders and looking great for the market. Everything is big, and a lot of historical things are happening right now that really are game changers that could change everything and how people connect things. Because Iran, like if you look at it from a different standpoint, Iran is like there's a group of countries. We have Iran, we have the U.S., you have India, you might have China, and it's this group of kids, and there's a fence, right? And that fence is crypto. Using it internationally, getting into it really says a big thing, because a lot of people are really against crypto, or like not with crypto, or really crypto isn't like super right now. It's big with companies and stuff like that, and people are starting to recognize its worth, but it's not exactly there yet. So crypto is that fence, and Iran is one of the kids deciding to climb that fence and see what happens. And so far, it's had good results. And so by doing that, it's likely in the future going to give courage to these other countries to also climb that fence. And eventually, as these countries grow up, after they've climbed that fence, someone's going to eventually remove that fence, and it's just going to be big, right? So this is really looking good for crypto. So the fourth pillar of today's news centers on a major pivot in the U.S. regulatory climate. So this is about the SEC. It's because for years the industry has operated under a regulation by enforcement model, but as of April 8th, 2026, two major developments suggest a transition toward a structured legal framework. And this really relates to the video yesterday, as the SEC yesterday, April 7th, 2026, had proposed a bill to I believe it was either Congress or the Senate on this, which I covered in the last video if you want to check it out, which was basically, it was basically saying how it was making way for new companies to get startups, fundraising. There's limits on fundraising, and as they get bigger, they can have even higher limits. It was making so that cryptos could be identified as not a security, so that lawsuits wouldn't be made, etc., etc. Because there's a lot of different lawsuits that the SEC that we're facing against different cryptos for being securities. A very famous example being the one with Solana XRP, right? They had a lawsuit, they won it. So essentially, this is to avoid stuff like that happening again, right? So, anyways, going to this topic, the SEC's regulation crypto assets framework. So, SEC Chair Paul Atkins confirmed yesterday that the commission has officially submitted its safe harbor proposal to the White House Office of Information and Regulatory Affairs, OIRA. So, this is the final step before a rule is published for the public comment. So, this is, there's a startup exemption. The proposal includes a 3 to 4 year grace period for new crypto projects. During this time, startups can raise funds and distribute tokens to build a decentralized network without being immediately classified as a security, provided they meet specific disclosure and investor protection requirements. And then there's also the exit clause. As of the end of the 4-year window, if a project can prove it has reached a state of sufficient decentralization, where a central team no longer exerts primary control, the token could transition out of the SEC's jurisdiction entirely, which is huge. Why is it huge? Because the whole thing of crypto is decentralization, and if the SEC doesn't control a crypto, then the government doesn't either. It's completely controlled by the people. Your money is your money, right? So it really, that enforcement without regulation without enforcement, whatever the verbiage was, crypto it's gonna be the most revolutionary piece of currency basically since gold. Because if you have gold, no matter where you go, that gold is still gold. It's going to be valued everywhere. And that's essentially what crypto is going to be. There's not going to be a single country, or single place, or a single government that can dictate what it is. It just is what it is, right? And it'll depend on the people. So why it matters is this provides a legal bridge for developers and that didn't exist during the previous decade of legal battles. And it essentially standardizes the path to launching a token in the US. So number 2, the White House quote, yield, unquote, defense. So simultaneously, the Council of Economic Advisors, CEA, released a landmark analysis today that directly addresses a major sticking point in the Clarity Act, which is the federal stablecoin bill currently moving through the Senate, which goes along with that Crypto Regulation Act that I was talking about in the previous video, and that we just mentioned just now. So, the findings. Traditional banking lobbyists have argued that stablecoins paying interest would drain deposits from commercial banks. However, the CAA's model found that banning yield would increase bank lending by a negligible 0.02%, which is $2.1 billion, while costing consumers over $800 million in lost returns. So, the conclusion, which is stated by the report bluntly, is quote, a yield prohibition would do very little to protect bank lending, while foregoing the consumer benefits of competitive returns, period, unquote. So, the impact, basically, is that reports provides a powerful political cover for senators who want to allow stablecoin issuers like Circle or Paxos to pass interest from treasury bills back to their holders. And so the summary of today's market indicators is that these regulatory shifts are being viewed as structural tailwinds, unlike the temporary price spikes caused by the Iran ceasefire. These changes suggest that by the end of 2026, crypto businesses in the US may finally have a predictable rulebook. And so the regulatory event, SEC Safe Harbor, current status is at the White House, OIRA, and the market sentiment is that it's bullish, clearer paths for altcoins, right? The stablecoins, regulatory, stablecoin yields, regulatory events, CA analysis released, which is the current status, and it is also looking bullish as it protects DeFi, decentralized finances, and retail returns. Then there is the Clarity Act, which current status is in the Senate committee, and it's looking very neutral, but it's leaning more towards positive. It's neutral, but leaning more towards positive, and it's approaching a final vote. So, this combination of safe harbor for new tokens and yield protection for stablecoins is widely seen as the green light institutional investors have been waiting for it to move beyond Bitcoin and into the broader ecosystem, right? So, going back to anything else that should be known, Actually, we're going to our 5th topic that I was talking about, the Schwab factor. So, anything else that should be known? The sleeping giant, right? The Schwab factor. So, while Morgan Stanley is targeting wealthy clients, Charles Schwab, which holds 38.9 million accounts, announced today that it is moving beyond ETFs to launch direct Bitcoin and Ethereum trading for its real users. So, there's really this, quote, mom and pop, unquote, on-ramp, right? So unlike Morgan Stanley's advisor-led model, Schwab is building this directly into its apps. This means tens of millions of average investors will soon be able to buy spot crypto, quote, spot, unquote, crypto, as easily as they buy Apple or Tesla stock. So, but there's also the fee threat. So Schwab is known for its history of cutting commissions to zero. Analysts are already predicting that Schwab's entry will force existing crypto exchanges like Coinbase and Kraken to drastically lower their trading fees to stay competitive. So what does all this actually mean? Well, if we step back and look at the five events together, we are witnessing the institutionalization of counterculture, quote, institutionalization of the counterculture, unquote, and here's the big picture. So crypto is no longer an, quote, alternative, unquote, asset, because when the world's largest banks, Morgan Stanley, largest brokerages, Schwab, and most critical trade routes, Hormuz, all adopt Bitcoin simultaneously, the quote experiment quote unquote phase is over. It has become a core utility of global finances. These three things, these three companies, these three businesses, these three nouns, for lack of a word, the big three, for lack of a better word or description, these big three are moving to it, which states that this is no longer just a what ifs. Could be. No longer a but it is. It is a reality. Sort of like when banks moved to the dollar, when people moved the dollar became a thing, rather than just using pennies and whatnot. Right? It indicates a new era being introduced for crypto. And then also the geopolitical de-dollarization. So the Iran crypto toll is a proof of a concept for how nations can trade outside of the US dollar system. So even if this specific ceasefire is temporary, the precedent of using Bitcoin to bypass SWIFT for $2 million per ship transactions is a bell that cannot be unrung. Right? Because as you guys should know, and there's the BRIC Nations Alliance, and just different countries in general, they have been wanting to move away from the dollar for so long. They've been wanting to get out of their control. They've been wanting to get away from things like the US tariffing them, right? And this indicates a chance. It indicates the potential and creates a potentiality for these countries to do so, which could actually look very bad for the US, or maybe it doesn't. Who knows? I guess we'll see. But anyways, so there's also the, quote, regulatory moat, unquote. So the SEC's safe harbor and the White House's defense of yields suggest that the U.S. government has decided it's better to tax and regulate crypto than to try and ban it. And this provides career safety for fund managers who were previously afraid to touch the asset class, right? And there's also market maturity. We are moving away from hype cycles and into utility cycles. Today's price jump wasn't caused by a viral tweet, it was caused by a ceasefire, a bank launch, and a trade policy. This suggests Bitcoin is maturing into a more macroeconomic barometer, reacting to the same forces as oil and gold, and the S&P 500. So the bottom line is that today, April 2026, marks the day Bitcoin officially stopped being internet money and started being world money. And the bridge between old financial world and the new digital one has been built. And today the traffic started flowing across it in both directions. Now, going back to the thing, what is more to being Bitcoin's price surging in the market? We're going to go into a little bit more than that. And that is that, from what I gathered, is that the current surge in Bitcoin in the broader crypto market isn't just about a single news event. It's a confluence of geopolitical relief, massive institutional infrastructure finally going live, and a significant shift in market psychology. So, there's the short squeeze mechanics. So the jump roughly from $68,000 to $72,700 was supercharged by the $595 million in liquidations within a single 24-hour window. And so the trap is that bearish traders have heavily shorted Bitcoin, betting that the US-Iran tensions would escalate and drive prices towards 60,000. And so the trigger is when President Trump announced the 2-week ceasefire via Truth Social on Tuesday evening. It caused an immediate price spike, and this forced those shorts to buy back Bitcoin to cover their losses, creating a feedback loop that pushed the price up to 4.9% in hours, which is what I mentioned earlier, just a little more on that, right? Number two, the institutional flippening. So for years, the market has complained that banks were gatekeeping crypto, and today that gate was removed. The capital efficiency, Morgan Stanley's MSBT ETF launch is significant because it's a 0.14% fee makes it cheaper for pension fund or a millionaire to hold Bitcoin than almost any other asset class. And the advisor effect is we are seeing a forced buying period. Thousands of financial advisors, not me, because I'm not a financial advisor if you didn't know. This doesn't include me, but just so you know. But other financial advisors who were previously restricted from recommending crypto are now moving their clients' model portfolios to include a 1% to 3% Bitcoin allocation. And the shift from speculation to on-chain, that's number three, shift from speculation to on-chain revenue. So the market in 2026 has become much colder toward hype. while Bitcoin is surging, we are seeing a flight to quality across the board. So VOC, which is verifiable on-chain revenue, institutional investors are now using sophisticated tools to short sell protocols that don't generate actual fees. And there's also stablecoin dominance. So stablecoin volume has hit an annualized rate of $5 trillion, rivaling Visa, which means the market isn't just people trading, it's a massive global payments network that happens to use blockchain as its rails, right? And then number 4, technical levels to watch. So analysts are now looking at the $80,000 mark as the major physiological, psychological, and technical resistance. So there's support. The $68,000 to $70,000 range has now flipped from resistance to a strong support floor. And the Fed catalyst is that with oil prices crashing 13% today due to the ceasefire, inflation expectations are dropping. And this gives the Federal Reserve more room to cut interest rates later this quarter, which historically acts as rocket fuel for Bitcoin. So that's essentially how it happened in 2009, how it blew up in 2000. I believe it was 2009. I know Bitcoin was created in 2009, or was it whatever it went up. Essentially, you can fact check that, right? So essentially how it went up was because of means like this, right? And so what it means for the average person is that we are entering a post-peak consolidation phase. So the days of 10,000% gains on random meme coins are essentially largely over, as the smart money has arrived. And so Bitcoin is now behaving more like a high-growth tech stock or a liquid recovery vehicle. It has become the primary way the world bets on global stability and digital infrastructure. And when you see Bitcoin surging today, you aren't just seeing a price change, you're seeing the world's financial system patching itself to a new digital layer. Alright, so essentially, it's not just crypto, right? It's not just crypto, right? Other cryptos that are, oh my god, wrong words. Ignore what I just said in the past 5 seconds. It's not just crypto. No, I mean it's not just Bitcoin, right? It's other things like XRP, Ethereum, Chainlink. All these other cryptos are also benefiting from this. Bitcoin is just the big name, but also if you're into the other cryptos like Solana, XRP, Chainlink, Cardano, I think it was ADA's or thing. But anyways, Cardano, all these other cryptos are also in on it too. So things are looking very nice. So anyways, what are the sources that were used for this information? I will give it to you in a second. Right, let me just get that. So the sources for the information used in today's video come from what do you call it? The DL News, Wikipedia, Truth Social, Bloomberg, and Eric Balkunas, Zacks and Crypto News AU, Farside Investors, Financial Times, Arcam Research, the White House, Council of Economic Advisors, Bitbo and Leisure Insights, the SEC, CFT Joint Interpretive Release, and yeah, that's about where we got our information for today's news. I hope you guys enjoyed. I hope this information was valuable. Remember, I'm not a financial advisor. I've mentioned it multiple times. This information is what you do with it. Trust yourself. Do what you must. I have the high ground. Yeah, I don't know. Like, do what you want. I hear Anakin Skywalker in the back of my mind. Like, I will do, or no, not Anakin. Obi-Wan. I will do what I must. You will try. Yes, we will try, and we will try to make lots of money because that's what we want. Yeah. Well, I hope you guys did enjoy, and yeah, this is where I will end for today.